Tesla's eventful start to the year continues after a tumultuous week in the market. The Austin-based EV giant settling a long-standing wrongful death autopilot lawsuit dates back to 2018. The settlement comes after Elon Musk's unveiling of the company's future plans through its robo-taxi announcement. Here's a look at what could come next for Tesla.
Let's take a look at another trending stock here on Yahoo Finance this morning, and that is Tesla. Look at that, shares off just about 1%, so pairing some of the earlier selling that we did see this morning. Now, more bad news here for the EV maker, recalling nearly 4,000 of its Cybertrucks over faulty accelerated pedal that can potentially stick here. So that's having a real impact on the stock this morning. So far, they've received notice from 2 customer claims related to this issue. But the takeaway here is a couple of things. One, this is actually also giving us a glimpse into how many Cybertrucks potentially have been sold up until this point. So kind of buried beneath the headline, the fact that there has been almost 4,000 Cybertrucks now on the road. That is a number that hasn't necessarily been disclosed in terms of their deliveries so far, production and delivery numbers. But then also just points some more trouble here for a stock. We've been talking about it now time and time again that has run into trouble. Shares are down about 40% since the start of the year. And Elon Musk and his team are struggling a little bit to turn things around, turn the narrative around on the street.
Yeah, and you think about ultimately the fact that they just started delivering this vehicle in Q4 of last year. And so the fact that, 4,000, as you mentioned, we know that there are that many that actually need to be recalled or out there on the road. That's a significant, at least move forward in the delivery compared to the overall figure that they've been talking about in recent earnings call. 1 million reservations for the Cybertruck to this point, or at least to the point of the last earnings call. So that particularly shows you, number one, I think in the recall, it's going to have a broader sentiment impact as well. You've already heard some of the issues, even from reviewers who had gotten a car to be able to test and saying, all right, this doesn't make the mark on multiple things that Tesla had said it would. And so now it's a larger question of, okay, will this have some type of dent on the sentiment for potential buyers and prospective buyers out there as well?
All right, it is time now for the call of the day, and we are talking again about Tesla. It is getting another bear, or at least not as strong a bull on Wall Street. A longtime Tesla bull downgrading the stock to hold from buy. Emmanuel Rosner, who is Deutsche Bank lead U.S. auto analyst, is joining us now on what was behind that change in perspective. Emmanuel, thank you so much for being here. And it seems like the change in perspective is relatively straightforward here. It's what looks like a pivot away or a de-emphasizing of the lower cost model Tesla, right?
That is correct. Thanks for having me. So I believe that there is a strategic change going on at Tesla right now, and this is essentially thesis changing. Even though we've been buy rated, we've been at the forefront of warning investors that near-term conditions are really, really challenging for Tesla, but that you shouldn't really care that much if you're longer-term investors, because around the corner, there's this Model 2, the cheaper model coming at a $25,000 price point, which could really inflect things back up. Volumes, margins, earnings, free cash flow. These would be really the game changer. Now, based on multiple media reports, it very much seems like Tesla is no longer working on the Model 2. Instead, it's putting all its eggs in the robo-taxi baskets. If that's the case, you have much stronger challenges for much longer than anticipated. There is no turnaround on earnings or free cash flow anytime soon. That basically means that it is much more difficult to remain patient and positive.
Yeah, and Emmanuel, I'm curious, is the challenge here in how long you would need to wait, or the amount of uncertainty around this robo-taxi model ever coming through? Because Tesla has long been, a story that investors have had to have a lot of hope in, but I'm wondering, are we testing the limits of that at this point?
Yeah, so in our discussion with investors, I think people usually, especially longer-term investors, they're excited about the concept of robotaxi. It's a good business. It's something that has the potential to be a meaningfully better business than making cars. It's recurring revenues, it's software revenue, it's great. The issue is, what probability of success can you really attribute to it? What is the timeline for it? And so our sense is, as long as there was a core business, which is essentially dominant EV maker, and robotaxi was an optionality on top, this was very exciting. This was essentially the crux of the bull thesis. You have a successful EV maker which could really become dominant, and then look at what they're doing on the robotaxi side. Now, essentially, what seems to be happening in terms of strategy is we're no longer focusing on making EVs. We're no longer focusing on making them affordable. We're betting the entire company on robotaxi. There's no new consumer model coming. As a result, the current business is essentially fading. It's melting. You are putting all your eggs in that robotaxi basket. That is extremely risky. It is extremely risky for investors in terms of profile. It is also probably way past most people's investment horizons in terms of monetizing it. So I guess the short answer is it's both. It's much higher risk, and it's also way too far out.
Emmanuel, what do you think we're going to learn on August 8th at this robotaxi event? Because to your point, there's not going to be an actual introduction of the product that is imminent, right? So what then does that event do for Tesla?
It's a great question. My guess is because they've been working to a certain extent on Model 2 up until now, they will still be showing a product. It may actually very much look like a Model 2, just without a steering wheel. And so this would be the concept. And then maybe we would also learn some sort of timeline around which Tesla could deploy a pilot program in some geography. So call it, I don't know, 100 or 1,000 of them that will be essentially pilot testing the robotaxi business in one geography based on some agreement with the local authority. So I think we'll probably learn about, okay, what will be the first form factor of it? What could be a timeline for at least initial deployment? What we will not learn is how long will it take to really have that in terms of mass production? What will be the cost of it? And really, when could that really become a real business? I think these will probably remain open questions. And in our view, there's such large challenges operationally or from a regulatory point of view, or even from a technology point of view, which is probably the biggest challenges of all, that we're talking about multiple years out. And if this is the core business, as opposed to EV being the core business, and this being sort of like the cherry on top, this is extremely worrisome.
And Emmanuel, just in terms of Tesla's story overall, is this reminiscent to you at all of that 18-19 period where we saw the stock come down, I think 50%, something on that order, and there was sort of a reset in what the path forward for the company would be at that point? They're coming off, going private, not going private, et cetera, and just how you make sense of what is ultimately still a battleground stock, despite being 10th, 12th biggest company in the S&P 500.
Yeah. So I think that a battleground stock is probably still fair. I think investors are trying to figure out why is there this change in strategy. Is it good? Is it bad? I think faster money generally is pretty negative, but longer term investors have generally stuck with it. Here is what really truly worries us. In the end, the valuation of a stock is a function of earnings and a function of multiple. From an earnings point of view, if there's no Model 2 coming, the earnings you're seeing this year around like $2 of EPS or so, that is the best that it gets over the next probably 5 years, maybe even till the end of the decade. There is no inflection point. It will not get better. It's the same old lineup, which will just get less and less competitive. So more price pressure, more volume declines. They will not earn more than $2. So then you're like, okay, but is there a robotaxi, earnings coming on top? We don't know. It could take years. It could take a lot of time to scale this up, to fix the technology and scale this up. So earnings probably are what it is. So the question is, what multiple do you pay on this? Well, if it was a traditional automaker or even a successful automakers, it wouldn't be anywhere near what the current multiple is. The reason we're in our downgrade to hold, applying still a punchy multiple, is because of that robotaxi optionality. So something has got to give more than likely. Earnings are not probably going to grow for the foreseeable future if Model 2 is gone. Robotaxi is what probably keeps that multiple high. It's hard to see how this would create value for, from the current stock price. So all in, still a lot of uncertainty. They're reporting earnings next week. We'll want to understand why this change in strategy. What are they saying internally about robotaxi that gets them excited? Maybe that's what sort of like possibly, keeps the stock where it is. But generally speaking, we very much worry that long-term investors who have been supportive of the stock will basically say, look, we loved robotaxi as long as this was optionality. Now that this is essentially the core business, this is a completely different risk profile than what and time horizon than what we had been investing in, and start making their way for the exit.
One analyst that we're going to talk to next still maintains his buy rating on Tesla, but says that the clock is striking midnight for Elon Musk because of many of those reasons that you just listed. So for more on that, we want to bring in Dan Ives of Wedbush Securities. Dan, it's great to see you here. So I was just going through a recent note that you put out this week. You're saying that the clock has struck midnight for Elon Musk, that Tesla is going through a major, quote, category 5 storm right now. Where do we go from here?
I think we're going to find out Tuesday, because this is probably the worst period that I've seen, I'd say in about 6 years for Tesla. And patience is wearing thin. And you see from an investor perspective, and obviously, many thrown in the towel, the long-term story is still there. And that's why we remain bullish. But no doubt, this is white knuckle. And there could be darker days ahead if Musk does not handle the call, I think, like an adult in the room, and actually give some sort of vision and navigation with a lot of questions remaining.
Dan, it's great to speak with you. Let's stick on this adult in the room concept, because a lot of the challenge here for Tesla is that the fundamentals don't always match up with what Elon Musk is purporting about deliveries and company fundamentals. I know that you do a lot of traveling to Asia to take a look at what's going on beneath the hood for some of these manufacturers. What can you tell us from your experience on the ground that may not be making headlines or may not be making its way out of Elon Musk's mouth to investors?
Look, right now, I can tell you firsthand, China EV market, it's like the video thriller, Nightmare on Elm Street. Pick your spot. It's been bad. Now, that's obviously been the huge headwind for Tesla, which is really, that's a key part of the growth, right, in terms of the China story. What I think investors need to hear is, what's the strategy to turn this around? Are they going to maintain prices? And the big thing is Model 2. You need Model 2 to have that growth story the next 18, 24, 36 months. This cannot just be about autonomy 5-6 years from now. And I think that's really the crucial point here that they need to get, and he needs to get on that conference call in terms of that point.
Dan, what are you hearing, or what are you expecting in terms of the timing of production of the Model 2? And if it doesn't happen according to plan, more specifically, what does that then downside risk look like?
If they don't do Model 2 and went straight to autonomy, that would be like being at a cliff in the Grand Canyon and looking down below. The point is, it's a scary proposition, because when Tesla talks about 2 growth waves, the second wave is Model 2, refresh Model 3, Model Y, and obviously some other models that they're going to introduce. But that's the issue right now. In terms of Model 2, you cannot go straight autonomy. Obviously, some have reported it. And this is really what I view when I say clock striking midnight. It comes down for Musk. Navigate the category 5 storm, just like he has in 18, 2020, and other. Otherwise, this is not just trust me, because I think that's really the frustration now, that essentially is, went from a Cinderella story, magic carpet ride, to what's been a bit of a horror show, especially the last 3-4 months.
Well, analysts are, and we're hearing from sources that the future of Tesla does really rely on cracking that driverless autonomy that you did mention. How likely is that?
Look, autonomy is going to be key, but we're not really going to see driverless, no steering wheels, 2030. And think about the regulatory involved here. So that sounds great on a PowerPoint and sci-fi in terms of what autonomy, and we do believe in the autonomous vision. But in the near term, it's about growth. What does free cash flow look like? How do you reverse the growth trend? How do you get to 3, 4, 5 million units? The only way you get there is with a sub 30K car, Model 2. For a product line that really hasn't had a refresh since Model Y, Cybertruck continues to be limited. That's not going to be mass market. And that's the issue here. This should almost be the equivalent of Apple being like, okay, iPhone 14, iPhone 15, iPhone 16. Hey, just wait till the iPhone 24. Stay tuned.
That probably wouldn't work out too well for Apple's side.
No.
Dan,
But that's also the difference between a tactician, a Hall of Famer like Cook, versus what we're seeing with Musk, which has really been like a comedy show, a bad comedy show, the last few conference calls.
So Dan, let's talk about what you think is more realistic then when it comes to delivery numbers, when it comes to gross margin numbers. What do you think is more realistic of what we're going to see from Tesla then in the coming quarters?
Just give real, for the company didn't give guidance, right? So it's give what margins could look like. There'll be a lot of charges. Where does gross margins level out at? What's a realistic delivery number? Is it 1.95? Is it 2 million? What does growth look like? Like, give the 2 to 3 year targets in terms of, and that could be an analyst day. And then also they have to have the AI day in terms of where also Musk needs to recommit to keeping the AI initiatives at Tesla. Remember that, that threat, which obviously has ruffled a lot of feather, and that's a huge issue. Right. So we could talk about the proxy and the Delaware and moving to Texas, but there's a lot of issues right now that are uncertain. And that's why investors, and I hear it all day long, investors just like too much risk with no pilot on the plane. And they don't want to see Ted Stryker as the pilot.
So Dan, super quick here. You sound pretty pessimistic. You're still a buy on the stock. What would it take to change your rating?
Look, next week, they need to basically reaffirm the Model 2, reaffirm the low-cost vehicle, give a strategy in the next 6, 9, 12 months. This can't just be a trust me, autonomy, we'll be back to you in 2030. And that's why you're seeing many throw in the towel, because of the fears and a lot of the reporting that surrounds that, along with the cost cuts that were definitely, I'd say a little gut-wrenching relative to a company that should, in theory, be in growth mode.
2024 has been off to a rough start for Tesla and its CEO Elon Musk, with shares of the EV maker down more than 35% this year, giving back a good chunk of the massive gains the name saw back in 2023, right now hitting their lowest levels since January. It's now among the worst performers in the S&P 500, closely followed by another embattled company, Boeing. So how did we get here for Tesla? Well, back in January, they warned of notably slower sales growth that fueled investor concerns about stock demand and competition from China. CEO Elon Musk then said the company would be focusing on production of its new generation vehicle. That day, Tesla stock suffered its sharpest percentage drop in more than a year, with $80 billion wiped out in market value just in that day, a record-breaking drop. And then we had price cuts and more price cuts. At the beginning of the year, Tesla cut prices of the Model 3 and Model Y in China. The company also reported slowing China shipments, spooking investors and sending shares to fresh lows. Then moving on to February, Tesla slashing prices in the US off of its Model Y cars. That was less than a month after the car maker cut those prices in Germany. In March, things got worse. Deliveries for the company fell 20% from the previous quarter, marking the first year-over-year declines since 2020. Now, we should mention deliveries are the closest approximation of sales reported by Tesla, but they're not precisely defined in the company's shareholder communication, so it is an estimate. And just this week, the company cutting 10% of its workforce and a major executive resigning after 18 years at the EV maker. So amidst all of that bad news, also, Elon Musk did try to spark some optimism, saying that the long-awaited robo-taxis would be unveiled in August, but that might not be enough for the street. The rough ride for the company, leaving Wall Street feeling very bearish on this name. Over 60% of analysts had a buy rating on Tesla just last year. Now only 32% of analysts have a buy rating, over 44% have a hold, and 23% have a rare sell rating.
You have strong thoughts on that. Would be Tesla. Shareholders are going to be able to vote again on Musk's pay package. What do you think is going to happen there?
Well, I think the same thing is going to happen. I don't think the issue was whether shareholders approved this or not. Shareholders had approved it before and probably will approve it again. The issue is the board of directors never negotiated with Elon. And it seems like when you read the proxy that there was no negotiation about this either. Elon said, well, we're going to put this package back up and then we're going to move to Texas so they can't take it away. And, it's this kind of thinking where the board is just basically, the dog getting walked on the leash or whatever. It's just not the way companies are supposed to be run. So I suspect that even if it gets approved, they'll get sued again. So
I mean, you guys are shareholders. Are you going to vote for this stuff?
I've been thinking about it because I did vote for it before, and now I feel like the CEO of the company should be working at that company like pretty much every day, if not every day. And so I think in seeing his performance since he bought Twitter, I would require in this pay package that he come back to work at Tesla full time, but I would vote for it if that was the case. But if he's going to keep working at Twitter every day, I don't see why, like, he's even CEO.
But they're not changing it, are they? Isn't it exactly the same?
Yeah, it's the same thing. And that's why I'm saying it's stupid, because even if people approve it, it'll get sued again. And then they're back in court. And moving to Texas, I don't think necessarily solves that problem, because Texas is trying to run their state as a shareholder-friendly state to attract business. And, just because Elon's a big employer there doesn't mean he's going to get the judge he likes. You know what I mean? So I think the issue is the board of directors of Tesla. It has to have independent directors. It's just required by law. And until they do this, anything the board does can be invalidated.
Do you think they will reincorporate to Texas, though? How do you think that vote goes?
I mean, once again, it really just depends on Vanguard, State Street, and, the major index funds and in Glass Lewis and what they tell these funds to vote. So, 15 to 20% of Tesla is owned by 3 passive index funds. So whatever they choose really is where it will go.
Ross, you were adding to ASML as the stock goes down. Are you adding to Tesla as the stock has gone down?
No, it's the opposite. We've been sellers of Tesla over the last 6 months, and I'm so grateful we did it. If you really chart my fund GK versus Tesla, which was our top holding substantially by a large amount up until, let's say, November with the anti-Semitic tweets, was when we started lowering our position. And thank God we have, because, we've outperformed Tesla this year by something like 50% differential. And if we would have kept Tesla where it was, it would have been a kind of a dismal year for us. So I'm really grateful we took the moves that we've had. We've trimmed Tesla down to a reasonable position. It's about a 2% position in our firm and in my fund. I love the company. I just want to make it clear the products are amazing. It's a great company with great employees, and I just think it's being mismanaged at this point. And it, I think their strategies are not working. So we've lowered our position. I hope I don't end up selling out of this position, because I do think the long term for Tesla could be amazing if it had the focus of a full-time CEO.
So you're trimming Tesla, Ross. Are you putting more money to work in other EV makers?
No, it's the opposite. I mean, if Tesla keeps lowering prices and it puts so much pressure on everybody else, and even though I love Rivian and I've loved Polestar in the past, it's really hard to compete when Tesla keeps lowering prices, because they're such great vehicles. So they've actually hurt the industry. Ironically, Tesla's goal was to advance sustainable transportation and energy, and now it's actually helping push it back because of the problems that have been created by Elon. And it's really sad to me, So I don't think, and I have my whole Biden administration hasn't done well by clean energy. It hurt our investors. We've had to get out of solar. We've got out of pretty much all our EV makers, and we have a low position in Tesla. And we've redeployed all those assets into, AI relating themes and companies that we feel will add tons of value over the next period of time, and that's been a great trade for us, sadly, because I'm a big believer in investing for improving the environment.